Hello and welcome to GrainTV. It's Thursday, October 29th, one day before First Notice Day on beans, but we had a lot of action today. Beans led the charge lower with a 19-cent drop, while corn and wheat a little less reserved in their sell-off with a 2-cent drop. Logan, what's driving the market today?
Well, we got export sales here out this morning, Kevin, and a relatively quiet day, I guess, in terms of these export sales. You can see that corn just missed the mark here, 489,000 tons reported sold last week. The trade was looking for a relatively strong week in sales between 700 and 900,000 tons. We just did not get that here today. Soybeans, though, once again showing another strong week in terms of sales, 1.3 million tons sold there, in line with trade expectations, but kind of continuing a theme that we've seen throughout October. A lot of export sales of U.S. soybeans getting booked at this time of year. Once again, China was the big buyer, accounting for about 80% of these sales that were booked. Wheat actually had a relatively strong week here as well. You can see beating trade expectations and doing a little bit to reverse the course that we've seen over the last couple weeks where those wheat sales really disappointed. I have to see if that has more a positive influence on the wheat trade, but it seems like any positive strength that we saw out of wheat maybe was more related to what we're seeing in Russia right now than this weekly export sales report in particular.
Right, yeah, our wheat export sales, although, like you said, beat expectations,
right.
Our expectations are very low when it comes to wheat trade this year. And so that's something that's going to take some time to sort of turn around and get this market excited. On the export front, you show beans as being exceptionally strong there. What we're seeing on basis is really a sort of a reflection of strong bean movement, and that is higher barge rates. We're seeing barge rates yesterday ticked up higher again along the Ohio River up north on the northern Mississippi stretch. Those stronger barge rates are leading to weaker basis, especially in those river terminal areas. Some river terminals are off as much as 5 to 10 cents, not only with barge rates moving higher, but also with this big run-up. I think we're seeing those soybean stocks start to flow to market.
Right.
So that's where you're seeing red. The basis change is off in the last 2 to 3 days. Green areas are actually pretty stable. In the corn, this is what's maybe somewhat surprising, is we're actually seeing a lot more stability here in corn. It seems like we're already starting to come a little bit out of those harvest lows. We're starting to see some movement higher. Some of the ethanol plants are ticking up their basis after dropping it lower in the last few weeks. Right. So I think we're on the back end of the basis lows, and it should be higher for the rest of the calendar year at least.
Yeah, just looking at those ethanol facilities, Kevin, we did get the ethanol report out yesterday, and that showed relatively strong weekly production figures. So not surprisingly right now, based on where margins are at, that these ethanol producers are able to maintain a relatively strong basis. If we kind of take a look here at the soy meal market, we've talked about that quite a bit here this week on GrainTV. This soy meal rally has really been the backbone of a lot of the strength that we've seen in the soybean market. If you take a look here at this daily chart of the January 15 contract, you can see that today we gave up quite a bit of ground here when looking at the January contract. In my opinion, there were a couple things that were contributing to this weakness. You can see that we made a run really at those highs that we printed around the June 30th planning report here. And if you look at kind of the relative strength of this move, you can see that right now this market's exceptionally overbought, so it's due for a correction. One more thing to add on to it here is that the CME Group is raising margin requirements effective tomorrow by about 25% for both speculators and hedgers. So anybody that is long this market right now, they have to make a decision. Do they want to put more money into a trading account, or do they want to take some of these profits off the board?
Right.
Seemed like today could have had some traders that were opting option B there, taking longs off the board.
Right. And on beans, we do have First Notice Day tomorrow. We're going to see, we haven't seen much action in terms of rolling by commercials.
Yep.
It's been very sparse, with the market in a pretty strong carry. So I suspect some of those commercials rolled today, but I think a lot of them are going to be rolling tomorrow. So it'll be interesting to see how that affects bean trade.
Yeah, absolutely. We have a great cash marketing platform here at GrainHedge that all trading clients get access to. If you want to take a look at that and get some more information about the basis insights that Kevin has shared here today on the show, visit us over at grainhedge.com, or as always, you can call the office. Number here is 877-472-4607. Thanks a lot for joining us here on a Thursday. We'll see you back here tomorrow to wrap up the week.